Hi there and welcome to the weekly roundup for the week ending Friday the 30th of October. We hope you're enjoying these weekly roundup. Please do subscribe to receive free stock market content, and if you've got any questions then please do pop them in the comments box below. We would love to hear from you. Finally, we'd like to welcome you to follow our market sector reports on banking, tech stocks and even IPOs using the link in the descriptions box below. So we've seen some really heavy selling on the markets across this week as coronavirus cases have surged. Globally, there are around 45 million coronavirus cases have been recorded, and this is really starting to unnerve investors. Here in Europe, we've seen record surges, and France and Germany almost simultaneously announced a national month-long lockdown. We haven't seen the national lockdown here in the UK yet. There is chatter that it will be on the way. The DAX has fallen steeply across the week. It was at one point looking to be trading down around 10% across the week. That's actually just picked up slightly today, and it's now looking at around, it's going to be facing losses of around 8.5%. FTSE is looking at losses of around 5%, so still a very heavy week of selling. Over in the US as well, not only have you got concerns about coronavirus, as coronavirus cases hit around 90,000 new cases a day, but you've also got political jitters from the US elections, which are due to take place on the 3rd of November. So yeah, US stock markets as well, they've been trading on the back foot. Oil and the commodities sector, that has had a terrible week as well. It's down around 10%, and the problem here is concerns over future demand, with countries in Europe, especially the largest two economies, France and Germany, going into lockdown. The US is going to probably see tightening lockdown restrictions as well. Travel's going to be reduced. Also, air travel is just not really picking up in the slightest. So that's really sort of hitting the demand outlook for oil, and that's happening at the same time that production is actually increasing in Libya at a time when it's least needed. As far as stocks are concerned, we've had some big movements in stocks. The banks have been very much in focus this week. UK banks have been reporting. Now, last Friday we saw that Barclays reported and they did better than expected, and that's really been the theme across the week. We've had Lloyds, NatWest and HSBC have done better than expected. Lloyds and NatWest swinging into a profit in the third quarter. What we've seen is a reduction in bad loan provisions. These have come in less than what we were expecting, and that's boosted profit. Also with Lloyds, they've had a really interesting ride on the back of this mini housing market boom, which we were seeing here in the UK, and that's helped their mortgage department, mortgage lending. Even with the house prices, we've seen nationwide reported today, house prices have jumped 5.8% year on year. So it's an incredible surge in house prices, given the situation that we're in. There's a good chance that this is going to come to an end pretty soon, as the furlough comes to an end and as economic conditions tighten again as we go back towards lockdown conditions. But as going back to the banks, NatWest, they've also swung into a profit. They were trading up around 5% a little bit earlier today. Now they're trading up around 3% on the day, as they reported lower bad loan provisions. Other stock in focus, we've had Next, the bellwether for the retailers. They actually really impressed with their third quarter results. They upped their profit guidance to 365 million for the full year. That's up 65 million pounds just from September. So that's an encouraging sign. What we've seen with Next, they've got a really solid online offering, and that's really supported them throughout the lockdown period and coming out of lockdown, even when people have been nervous about returning to bricks and mortar shops. So the online surge in sales was up around 23%, and that really outweighed the 18% decline in sales in bricks and mortar. for next. And then also we've got the FANGs. They've been very much in focus this week. So Netflix have already reported, but last night we saw the likes of Facebook, Amazon, Alphabet and Apple report. Now they did actually beat on their earnings, but what we have seen is that Apple, for example, is trading heavily down in the pre-market, down around 5%, and that's because their iPhone sales are actually the worst quarterly iPhone sales for around 2 years. And the reason for that is because of the delay in the release of this iPhone 12. So that's really hit sales, dragging on demand for the stock at the moment. Also with Facebook, for example, we've seen that there's a gloomier outlook, which is also dragging on the stock pre-market. Thanks very much for joining me. Have a great weekend.